This first slide that you have here is what's called the grand recap. Every year at the end of the year, we have to publish the tax roll. And the tax roll is a listing of each individual assessment and what they're assessed at and how much they pay. The accumulation of all that is what's called the grand recap. And as you can see here on the grand recap, if you look down in the bottom where the red is, total parish revenues from property taxes is $88.5 million. Okay? That's what we get. Now understand, this grand recap doesn't include what Bossier City gets, doesn't include what Halton gets, Benton or Plain Dillon. They have their own recap, and then those monies are used for different purposes and go to different places. Okay? I want you to take special consideration, number 4 up there. It's called Consol PAR. What it means is consolidated parish. Every year when people come in and talk to me about their bills, they'll bring it in and they'll say, what is Consol PAR? And I have to explain to them. But many, many years ago, I think Michelle was on the school board at that time, the parish decided to consolidate a bunch of millages into one big millage. Go to the next slide, please. And here is the breakdown of that number 4 millage and where it all goes. You've got the police jury for the health unit, you've got the police jury for library, police jury, road and bridges, police jury, correction facility, assessment district operations, that's me, law enforcement, school board, and school board. And it totals up almost $70 million. That's where the bulk of the monies go is to this consolidated parish millage rates. Next slide. This year, 2012, is a reassessment year. The last reassessment occurred in 2008. This is the letter from the state of Louisiana, from the Louisiana Tax Commission, basically giving a statewide advisory that this year's a reassessment year, and we are to reassess all the property in the parish. Next slide, please. And this is just a copy of the advisory saying that it's constitutional that we do it this year. So not only are we talking about a bond issue and some millage increases, we're talking about reassessment also. So I'm kind of going to split here and talk about both of those things at the same time. Go ahead and next slide, please. The Constitution how come the train come when I got up here? The way the Constitution breaks it down, a lot of people don't understand this, and this is unique to the state of Louisiana. It's different in every state. Is all land is assessed at 10%. So if you got a land that's appraised at $100,000, it's assessed at $10,000. Doesn't matter if a house is there. Doesn't matter if there's a commercial building there. The land is at 10%. All residential improvements are at 10% also. So the houses, apartments, those are 10% also. Electric cooperative properties, excluding land, are at 15%. Public service properties, that train going by is a public service property. Gas company, electric companies, some barge companies, some pipeline companies, things like that fall under public service. They're at a 25% assessment rate, and all other properties at 15%. All other properties mean all commercial buildings, all personal property, things of that sort are assessed at a 15% rate. So you have basically 3 different rates: 10%, 15%, and 25%. Okay. Let me stick this in here. The 25%, I don't do the assessments for those. The state does those because typically they include multiple parishes or even statewide. Kansas City Railroad doesn't just run through Bossier Parish, it runs through many parishes. So the state does the whole assessment for them. They split out what comes to Bossier Parish and what goes to Caddo and what goes to Lincoln or wherever. They make those determinations. Next slide, please. You know, when a lot of people come to me, they wink at me and they nod at me and they say, you know, you're not supposed to value property at fair market value. Well, yeah, I am supposed to value it at fair market value. That's what the Constitution and the revised statutes of the state of Louisiana says. And it even defines fair market value. Fair market value is basically what a willing seller and a willing buyer would pay on an open market with no other influence. You know, it's not a sale of a house from a dad to a son. That's influence sale more than likely. It's not a foreclosure sale. It's not something in bankruptcy. It's an arm-length transaction that occurs between a willing seller and a willing buyer. So when we're looking at sales of properties, first thing we got to figure out is it an arm-length transaction? And if it's not, we got to get it out of our pot that we're going to use to consider all appraisals on it. So next slide, please. And also, the laws of the state of Louisiana also tell us how we're going to reevaluate property, or how we appraise property. And we use the same three approaches that if you were to hire an appraiser to appraise your house, he's going to use those approaches, or your businesses. We use the market approach, which is like properties that are selling on the open market. Let's say you're looking at a house and you've got 5 houses over here that are selling for $105 a square foot, with a house you look at worth $105 a square foot. Now that's very basic, but we do it the same way an appraiser does it. We use the cost approach. It's actually called the cost less depreciation. We have cost guides. The one we use is Marshall & Swift that says, okay, if we're going to build this commercial building today, what does it cost to build it? Brand new. And so you figure that out, and then you say, okay, it costs this today to build it, but it's 10 years old. You got to less out 10 years worth of depreciation out of the cost to build. And then we use the income approach. The income approach is used on places or things that generate an income solely for a certain purpose, like an apartment complex or a hotel, strip centers, things like that. We can use the income approach, and we capitalize that income approach to come up with an investment value for that certain piece of property. And we use all three of these approaches in valuing properties throughout Bossier Parish. Obviously, houses, we're going to use weigh heavily on the market approach. Commercial buildings will weigh heavily on the cost approach. Income approach we'll use again for apartments and hotels, motels, and things like that. So go to the next slide, please. This next slide is a little busy, and it's kind of hard to explain, but if you look right here in this column, this number red, 93, we're required by law to be within 10% of fair market value, plus or minus. Okay? We can be at 90%, we can be at 110%. We got to be in there. Every year the tax commission comes in and they audit, they'll randomly pick houses that have sold throughout the parish. And they'll run a ratio study to determine if I'm inside those boundaries that I'm supposed to be in. If I'm not, they'll mandate me to reassess if it's certain kind of properties or all properties. The year after they do that, they come in and they take all the sales that have occurred and they'll build a price per square foot model, and then they'll compare that to other houses in the neighborhood that didn't sell. And again, I got to be within plus or minus 10%. So, you know, every reassessment, people say to me, and Jim and I have had this conversation a couple of times, you know, I understand you had to reassess, but did you have to do it so good? When 08, when I got through a reassessment, I was at 93%. And that was the number I was looking for. I wasn't at 97%, I wasn't at 99%, I wasn't at 100%, I wasn't at 105%, I was at 93%. That's where I was at. If you had years prior to that, and you see it, typically what happens is you do your reassessment in a reassessment year, you set your ratio, that's what the tax commission is looking at, that reassessment year, at 93. In the markets we've had in the past, let's say the market grew 4% from one year to the other. The next year when I ran that ratio, it would be at 89%. And a year after that, it would be at 85%. It would steadily go down because the market's increasing, but the assessed value is not changing throughout the deal. But these last 4 years have been very, very different than any reassessment I had. And And I'll be honest with you, I thank God that it's a lot different than any reassessment I've had. Because in the past, we've had markets that have gone up over a 4-year period 20 to 25% in value. So you can see in 09, we were still at 93%. In 10, we were at 91%. And in 11, we were at 91%. Go to the next slide, please. These are kind of breakdowns of some different categories, and these are homes only. When you talk about the homes are the main thing, they're the most properties in Bossier Parish. We class homes 1 through 9, 1 being the smallest, littlest type home you can think of, a class 9 house being the biggest, the best you can think of. Class 9 would be the house on Monacolot Road, going into Stonebridge. That would be a class 9 house. Class 8 houses, those are probably more like the houses in Stonebridge. Class 7 houses are like Green Acres Place, but there could be some class 8 houses in there. Could be some class 6 houses. Class 6 are probably like Rosedale type houses. Class 5 are like Shady Grove and Bel Air type houses. Class 4, Coleman Park, where my mother lives, those type houses. And goes on from there. And you can see before reappraisal we had class 9 houses at 82%. And I tell you why we got them at 82% and why they had it. When they start building these big, nice houses throughout the years, we're always trying to catch up to the things they put inside of houses. Okay? 10 years ago, you would not find an elevator in a house. Now you've got elevators in houses. Don't have many of them, but you got them. So we have to figure out how to value an elevator. Outdoor kitchens. All these, shower head that you go in and you punch a button and water squirts from every direction and Barry Manilow plays in the background. We've got to figure out how to assess a value or apply a value to all these different things, new add-ons that people are coming up with. And so those were probably slightly under where they needed to be. 8 houses were at 95%, 7 houses were at 93%, 6s were at 90%, 5 houses 86%, 4 houses 86%. Reason 5 and 4s are probably behind because that's a tough market. That's a market where you can have an owner-occupied house and 2 renter houses on either side of it. That's Shady Grove and Bel Air and that type of place. So, and the very last column down there is after we've already appraised all the houses in Bossier Parish. We're done with houses. We're finished. 9 houses will be at 91%, 8 houses will be at 94%, 7s will be at 94%, 6s will be at 92%, 5s will be at 91%, 4s will be at 90%. You saw on the last slide that before reappraisal, we were at 91%. When we get through, we're going to be at 92% on all houses in Bossier Parish. Okay? So overall, it's a 1% increase. So we're not seeing that 20-25% increase that we saw 4 years ago, or even 8 years ago. We're in the process right now of doing houses are fairly easy. You figure out what all Class 9 houses are selling for, and you hit a button and you make them all, not all the same, but close to the same. They're easy to do. Commercial property is harder to do. As of right now, not seeing a big change in commercial properties. Not through with all of them. We're probably about halfway through with them. But right now, there's not a big change in it. Go ahead to the next slide, please. That's all I've got to say on reappraisal. If you want to ask me other questions about it, I'd be glad to answer those at the end. I want to show you this slide because I have people come in all the time and they tell me how much the taxes on their houses are, and they're going to move to Dallas. You better get ready to pay some property taxes if you're going to move to Dallas. About 5 times what they are in Louisiana. Louisiana ranks 50th in property taxes on homes in the whole United States. Now, we rank 50 in a lot of categories that normally means we're doing bad. In this one, it means we're doing good. It means we are the lowest in the country on property taxes on houses. Okay? You know, Caddo millage rates are about 1/3 more than they are in Bossier Parish. We're at about an average of 100 mills, and they're at about 140 mills. So there is a big difference in Caddo and in Bossier. Go to the next slide. I couldn't put all the pages to this slide on there because there were a lot of them. And what this is all counties in the United States with population over 60,000 people and where they rank. The total number is about 790. We rank 757 in the country in property taxes on houses. Okay? Next slide. Business versus homeowner. You can see that the statewide average, and I do need to say this slide was done in 2007. That's the last time I put all these numbers together, because when I do the report that generates this numbers, it takes me about a month of finding things, and I was gone for a year. I've been busy since I've been back, so I haven't been able to do this in a while. But when I ran this report, statewide, businesses pay 80.4% of all property taxes, and homeowners pay 19.6%. In Bossier, it's 71, almost 72%, and homeowners 28%. It's that way. You know, we have a well-diverse tax base in Bossier Parish. All our eggs are not in any one basket, so to speak. While it probably be devastating if all the riverboats went away, that only makes up about 10% of our total tax base. Oil and gas is the same way; it's about 10%. So if all our eggs are not in one basket, where in some places all their eggs are in one basket. I heard a story years ago about the Walmart closing in Homer, and it made up like 30-something% of the city property taxes and 20-something% of the parish property taxes, just by one store closing. And also, you know, who knows what the three main factors in the cost of a property is? Any realtor here? Location. Bossier Parish is the location. Okay? You take a 2,000 square foot house in Bossier Parish and a 2,000 square foot house in Webster built the same year, the one in Bossier is going to be worth far more than the one in Webster, just because of where it's located. That's not a slight against Webster Parish, that's just the way it is. Bienville, Claiborne, it's the same deal. So you have many more homes that are 100% covered by homestead exemption in Webster, Bienville, Claiborne, Red River, DeSoto, parishes like that. So that's what causes a lot of these numbers to go up like that. So anyway, next slide. This is assessment on homes. Sonja already gave you some of these numbers. I didn't do it by the month. I did it by year. $100,000 home will pay about $32. $200,000 will pay about $160. $300,000, $290. $500,000, $417. $600,000, $546. On down to $1 million house, about $1,200. What Sonja said about the bond issue, the $210 million, that it's a wash. It exists today. Those millages exist today. So the bond issue, by passing that, will change nothing. Okay? Nothing will change on your bill. This is strictly the extra 12.85 millages that we generated by the salary increase and the technology. Next slide, please. I went with some real life issues or examples on some businesses. You know, Tubbs Hardware would be looking at about a $1,700 increase. Now, Tubbs Hardware, when I'm talking about Tubbs Hardware, I'm talking about only this location right here on Benton Road. It doesn't include the location up on Highway 3 outside of Benton. Red River South Marina, about $2,300. Top Dollar Pawn. I watch Pawn Stars every now and then, so I had to throw a pawn shop in there. About $3,700. Micro Metal, about $10,000. And on down the list, you see Horseshoe, $305,000. Harris, Louisiana Downs, $102,000. Calumet, $54,000. Remember that when you talk about a home, taxpayers only pay on the home and the land. Okay? business, when they pay on the land, the building, and all the personal property inside of the building. So the inventory, the equipment, the cash registers, the shelving, just all kinds of things. They pay on that too. That's also what gets that number 80% statewide up, is because homeowners don't pay on their couches and their TVs and their lazy boys and all that. We probably have lots less furniture in our house if we did, but we don't pay on that. So that's kind of a quick overview of what I have and what's going to happen. Again, reappraisal for this year is not going to be near about as bad as it has been in years past. That's a good thing for me, and then you decide on the rest of it. Thank you.